81 U.S. banks have failed so far this year, the result of bad loans and excessive risks that have caused nearly $4 billion in bank losses since March. The Federal Deposit Insurance Corporation is trying to reduce the number of failures by widening the pool of investors eligible to buy troubled banks. But even with the improving economy, FDIC Chair Sheila Bair says more banks will fail.
We expect the numbers of problem banks and failures will remain elevated, even as the economy begins to recover. Problem banks and bank failures also tend to be lagging economic indicators.
The FDIC, which guarantees bank deposits up to $250,000 per account, has not been immune. The agency's reserves have declined 20% since March. But Diane Ellis, who heads the FDIC's research division, says the agency has sufficient reserves to weather the storm.
We have $42 billion in resources available to cover future bank failures.
The agency can also dip into a $500 billion line of credit with the U.S. Treasury. But FDIC Chief Economist Richard Brown says that's unlikely.
And I think the point here, too, is that those cash resources can be bolstered, if needed, through our borrowing authority.
Despite continuing difficulties in the banking sector, Sheila Bair says depositors have nothing to fear.
The FDIC was created specifically for times such as these. Our resources are strong, your insured deposits are safe, and again, no insured depositor has ever lost a penny of insured deposits, and no one ever will.
Analysts fear the economy could face more turmoil if banks continue to fail. Washington has already spent more than $500 billion to bail out troubled banks since the crisis began. Arcega, VOA News.